Hey everyone, I am absolutely thrilled to have you here for this explainer. Today we're taking something that would normally, make your eyes glaze right over, a dense 80-page financial filing from the SEC, and we're going to translate it into this totally fascinating narrative of aggressive corporate expansion. We're looking at T-Mobile's latest Form 10Q. But spoiler alert here, this is definitely not just a story about a company selling cell phone plans. No way. It is a literal masterclass in how to build and then strategically unleash a massive financial war chest to morph into a diversified tech conglomerate. So let's get right to it.
Okay, let's dive right in. Our source material today is the official Q2 2026 Form 10Q for T-Mobile US Inc. Now, typically, these financial docs are pretty backward-looking, right? They just tell you exactly what a company earned and spent over the last few months. But if you know exactly where to look, specifically down in the notes to the condensed consolidated financial statements, this document actually becomes a crystal ball. It reveals T-Mobile's forward-looking ambitions, showing us exactly where they're placing their multi-billion-dollar bets for the future. To make all this super dense data easy to digest, we've organized this explainer into 5 clear chapters. Q2 2026 Financial Highlights, Expanding the Wireless Empire, the Ad Tech Pivot, Fiber and Satellite Ventures, and finally, Financing Customer Devices.
All right, kicking things off with Chapter 1, Q2 2026 Financial Highlights. Basically, how they are building the ultimate war chest.
Before we can even talk about how T-Mobile is spending its money on all these wild new ventures, we kind of need to understand the stakes, exactly how much cash this giant is actually generating. And honestly, the scale of these numbers is just staggering. If we compare the second quarter of 2025 to the second quarter of 2026, their total revenues jumped from just over $21.1 billion to an incredible $22.791 billion. A huge driver of that growth is their postpaid revenues. So that's the reliable, recurring income from everyday subscribers paying their monthly bills. That chunk alone surged to nearly $15.85 billion in just 3 months. They aren't just maintaining their lead, they are seriously accelerating.
But, revenue is only half the story. After paying for all the cell towers, device sales, and operational costs, $3.239 billion. That is the pure net income T-Mobile pocketed in just the second quarter of 2026 alone. Think about that. 3 months of profit, cementing this incredible profitability and giving them basically a blank check to go on the absolute offensive.
Which brings us to Chapter 2, Expanding the Wireless Empire, Buying the Competition. So you might be wondering, what exactly does a company do when it generates over $3 billion in pure profit in a single quarter? Well, they use it to aggressively buy up the competition. Over the last couple of years, we've seen this relentless consolidation in the telecom space. Back in May 2024, they closed the acquisition of Ciena Corporation, which you probably know better as the parent company of Mint Mobile, for up to $1.35 billion. Then, fast forward just over a year to August 2025, and they closed a massive deal to acquire substantially all of US Cellular's wireless operations and spectrum assets. They are systematically swallowing up these massive user bases to totally dominate the landscape.
And to really anchor the scale of these financial moves, get this. T-Mobile spent approximately $4.4 billion on that US Cellular deal. They paid $2.8 billion in straight cash on the acquisition date and took on another $1.7 billion in debt. But here's the crazy part. Even after writing those massive checks, their balance sheet shows they still ended Q2 2026 with over $2.8 billion in cash and cash equivalents just sitting comfortably on hand. It is an absolute flex of financial dominance.
Let's move on to Chapter 3, the Ad Tech Pivot, Selling More Than Just Cell Plans.
Now this is where the story takes a fascinating turn. Actually, scratch that, it's a completely unexpected turn as T-Mobile steps way outside its traditional cellular comfort zone. In early 2025, they made 2 really surprising acquisitions. First, they bought Vistar Media for $621 million. Vistar does technology solutions for digital out-of-home advertisements. Then, a few weeks later, they bought Bliss Holdco, an advertising solutions provider, for $180 million. Think about what this all means for a second. By grabbing these high-margin ad tech companies, T-Mobile is signaling a massive strategic pivot. They're turning their giant nationwide network of users and data into a highly lucrative advertising platform. They aren't just selling you a cell plan anymore. They are building a whole ecosystem.
Moving right along to Chapter 4, Fiber and Satellite Ventures, Investing in Next-Gen Infrastructure.
Now, what's really interesting here is that this ambition extends way beyond advertising. T-Mobile is looking to the future, dropping heavy investments into next-generation infrastructure that goes well beyond your standard cell tower. And they aren't just buying companies outright here. They are forming massive joint ventures. They're putting $700 million into a 50% equity interest in an i3 broadband joint venture. They're dropping another $2.0 billion with a B to establish a joint venture combining GoNetspeed and Greenlight networks to grab residential fiber customers. But honestly, the most shocking move? Teaming up with their absolute fiercest rivals, AT&T and Verizon. It is totally unprecedented and kind of ironic to see these bitter competitors holding hands to build out space-based networks, all to help satellite providers reach more customers and finally kill off wireless dead zones in rural America.
And finally, Chapter 5, Financing Customer Devices, the Cost of Consumer Credit.
Okay, let's bring it all back down to earth for a minute. We've talked about billion-dollar corporate buyouts and literal space satellites, but a massive chunk of T-Mobile's business happens right at the everyday consumer level. This is through what the 10Q calls Equipment Installment Plan Receivables, or EIP. Simply put, because smartphones easily cost $1,000 or more these days, T-Mobile is basically operating a massive consumer loan business to finance these devices for all of us.
So the crucial point here is understanding exactly how T-Mobile manages the risk of all these consumer loans. If we look at their 2026 originations based on the customer's credit profile, prime being the lower credit risk and subprime being the higher credit risk, they originated over $2.6 billion in loans to prime customers in just half a year, with only $33 million sitting 31 to 90 days past due. Meanwhile, they originated a much smaller amount, $569 million, to subprime customers, but the past due amounts are nearly identical at $32 million. It's such a fascinating look at how they meticulously categorize this credit risk and then manage their allowances for credit losses, literally just like a major Wall Street bank would.
When you step back and look at the sheer scope of this Form 10Q, you really start to see a master plan unfolding. We've traced their massive cash generation, their absorption of competitors like US Cellular, that surprise pivot into the ad tech space, their multi-billion-dollar bets on fiber optics, and those crazy unprecedented satellite alliances. All of which leaves us with this final provocative thought. With billions invested in out-of-home ads, fiber networks, and space-based satellites, is T-Mobile still just a wireless company? Or have we just watched the blueprint of a company transforming into something much, much bigger? Thank you so much for joining me on this explainer. Keep learning, keep questioning, and I will see you next time.